All right. Well, welcome everybody. Good afternoon. So another Bookmap Academy session where we'll go through the content that our users or Academy members have created, and we'll give some coaching and mentoring. If anyone is interested in this program, let me show you where you can go to bookmap.com. Click on the More button here. And then under Community here, Bookmap Academy, click on that. You'll sign up here. You can read through it. When you sign up, you are going to apply to the Bookmap Junior Academy. That's a part of step one. And you start to create some content, and we give you feedback on it. Like in this session, as you'll see. And then if the content starts to evolve and becomes good, then you will be invited to the Bookmap Junior Academy, and that will be a testing ground. You'll need to create at least one good piece of content per day. If you do that for the month, then you'll be invited to Bookmap Academy. And you can get Bookmap for free, the Global Plus version, our top tier subscription. You could also get the MBO bundle for free. But you will need to double that quota for that. The process continues here. You can become a Bookmap coach, and you can get data for free. We are happy to extend this to you, you'll come back in and coach some of the new junior members here. So you can become a Bookmap streamer in the step 4 here. Someone like Doug and Tom B, they have made it through that process. All right, so also Moby, but Moby is now a coach instead. He wanted to stick with the coaching. Anyway, that's the Bookmap Academy, and that's what it's about, as you'll see as we go through it right now. So general disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's get into it here. Let's see. We're going to start here with Jack. We've got Jack and David as coaches today. So, hey guys, how are you doing?
Hello, hello. How are you?
I'm okay. David, how's it? How's everything?
Very well. Very well. Hope traders had a good week as well. Thank you.
Yeah. So with Vilan here, Vilan and Rob are the two guys that I got to cover today, which is pretty good. I went a little light with the notes, specifically because I want to talk about a couple of things that are directly in these images, and I didn't want to have people cheat ahead. I'm going to put the notes in afterwards and then send those out. So first I want to just kind of take a look at this first image here, Bruce, if we could blow this up. It's a really good side-by-side image. And you can see that this is just kind of a great overall use of your landscape, essentially. You can zoom in and out of Bookmap so diligently as you need to, but you get his higher time frame on the sides there, and you can really see kind of what he's doing there. We get a better image in Bookmap in the third image, but let's go to the second image so we can really see his higher time frames go out a little bit more. I just showed these because this is really good for traders to see. You can see all these different visuals. So these are his higher time frames. He's looking at his dailies. He's got his overall resistance supports lines or his pivots. And then you can see his entries and his exits here. Now, he'll mark his entries directly in Bookmap, but you can see the partials come in and out and adding in directly here. So when you go to reference these and you're looking at them, if you want to track what he's doing, the best way to do it is to put these images side by side with the Bookmap image and the higher time frame image. And that way you can see exactly what he's looking at and then join it with the liquidity that we're going to look at in the Bookmap image, in the third image, Bruce, if we could go there. So
this one?
Now, yes, sir. Let's just blow that one up real quick. Now, knowing that we have that other image on the side, we're not going to use it right now. And I wanted Bruce to move away from it quickly because I kind of want to ask Chad here, look at this Bookmap image. Now, you know Vilan adds in on his positions. When he's bullish, he likes to take partials out When he sees weakness, he likes to add back in. In this image, I'd like you to figure out where he's going to add back in. It should be pretty obvious liquidity-wise where he wants to add back in. And just go ahead and type that in chat while I talk about kind of what's going on with his image here. See if anybody has any ideas. But as you can see here in his image, you can see that he's looking at that S4 level, and he's trying to get a good push off that S4 level. And when he gets that push off the S4 level, that's where he's looking for his entry. And he's looking for that in form of liquidity. And he's looking for his partials as he's going at those liquidity points. And they match up directly with what we see in his trades. Now, he always leaves a little bit of a chunky piece available so it can continue to go higher if it does. That's a little different than me, and there's nothing wrong with that. I scale out pretty much at my targets and walk away. He's focusing on keeping those in there as long as he's got it, unless he gets a hard rejection at his overhead level. And we can see that he took his partials out right where he lists in the passive liquidity there. And then from there, on that pullback, nobody's answered yet, but on that pullback right around 105 on his chart time is where he starts adding back in. He notices that the liquidity is back in there forming support, and he's going bullish again for another push higher. And that's exactly what he does. And he gets all the way back up to his other price target, and he scales on the way up. And Bruce, if we close that image and then go back to the second image, we can look at the right-hand side. Yep, exactly. Let's go back to the second image there, and then on the right-hand side, we can really see it. Yep. You can see him add in at that 1 o'clock time frame, scales out, matches out where he expects, and he's basically out of his trade right there. This is using two sets of tools to get exactly what you want. You have your higher time frame analysis, you have whatever you need on the side to give you your overall context picture, but you can get into the level 2 time and sales and see how the liquidity in the market is able to help support your direction in price. A lot of traders, they might exit a trade and not add in because they don't have that context. They can't look left in the book map there and recognize that there was a lot of liquidity there earlier, and that we see it again now. We can expect some level of support. And this is a great trade from that aspect. Vilan has been absolutely crushing it. He's been doing it for a couple of blue jacket competitions now. In my opinion, he's front runner. So this is the competition. If you guys want to be in it, you guys need to be doing stuff like this, showing and annotating your perspective on how trades go. How you doing, Vilan? Can you hear us?
Hey, what's up, Jack? How are you?
What's up, buddy?
How are
It's
you,
a
man?
good trade.
Thank you. This is my best trade ever. Just for the
Oh,
fact,
really?
like, oh yeah, I call this my S4 reversal to the moon trade because
Yeah,
it
this
I mean,
is
it
a good
literally
trade.
went to the moon. This was all-time highs for Google, and I played this into the earnings play and added into the earnings play,
Yep,
and
I saw that
it
one.
was yeah.
Also, for you guys that don't know, he posts some of his trades on YouTube, especially like his earnings stuff. A couple of them will be on a call together, and they'll sit there and go through shenanigans. We talked about it a couple of Bookmap meetings ago. I think Bruce did with you as well, right?
Yeah.
Yep.
Bruce was nice enough to let me come on when I was still in my Apple earnings play from a R4 breakout.
Yeah.
So it was nice to share that. Thanks, Bruce.
This is great to be able to use tools in different ways, to have, external kind of like pivot points, because I love trading off of levels. I just always have, whether it's pivots or time-based levels or whatever. Like I might already be biased, but I'm waiting for that interaction on that level to like get my entry. And then for some reason, I just find kind of that cohesion and confluence just really gives me a good trade overall. Is that
Yeah,
kind of what you've?
well, it's the thing of I could always recognize these things on the charts using level 2 and time and sales,
Yeah.
but I wasn't as good as other like professional traders and stuff that have mentored me and that I talk to a lot. But once I had Bookmap, I could see that detail in those trades and the entries I won and where I wanted to add and partial. I could see it so well that I could see what everybody else that I envy their trading that they can do without Bookmap, I could finally do it with Bookmap.
Yeah, exactly.
And
Because it's taking numbers and giving you a visual, a mental picture.
and I'm a visual learner.
Yeah.
So if I can see things, I can remember it, and I can say I've seen this before. I've seen this before, and then it just gets to where it's second nature. I've seen it so many times. I know exactly what it is. I don't have to think about it. I add or I partial or I get in or I stop out, and it just becomes second nature. And now that I can finally see it, I'm trading like those other traders that I've always wanted to trade like.
For me, it was just less eye fatigue, because if I'm watching the level 2 time and sales, it's very hard to watch multiple instruments. And I like to trade multiple instruments, but by turning the time and sales into a more visual time lapse, which is what you get with the Bookmap, I find it much better. Bruce, can we go to the Bookmap image, the third image? And I want to highlight again. So you can look at that add-in right there on that pullback, but if we turn left, you can see that there was a ton of liquidity there. And that's that kind of time and sales. But you notice that most of that liquidity kind of up at the top, the big red band, to the left, the red band in the liquidity box.
I think at 155 before it broke through 155.
Yeah.
Okay.
I've got it all the way on the other monitor because I got the chat screen up. Yeah. So, but you can look at that and you can see that not all of that liquidity transacted. It did transact some, but a large chunk of it moved. So when it comes back into the book, they're willing to be long now. This is basically like an order flip, a book flip, essentially. They're waiting for that price to come back, tag it, and then interact and go. And even then, they didn't all get filled. But it's a great setup. This is great visual to see those kind of bands of liquidity setting up.
Yeah, and like watching, like I'm a huge Wyckoff fan. Like I love Wyckoff. and you can see that in so much more detail on Bookmap, especially when like on that 155 level resistance becomes support.
Yep.
Like as soon as we broke through there and I saw that order like really come on heavy a little afternoon, I said, if we pull back there and that order starts to build up and I get the absorption that I want to see, I'm adding.
Yes, exactly.
And I got it. And I added, I got a great add and it never pushed against me. And
what's really great is right after you get that push through 155 on the first impulse move, you get a small pullback, but it stays right around that 155 level. It just consolidates there before it goes up to that, 156 and a little bit beyond level. It's really great to see those. I highlight them a lot. Like that's what I want to see. I don't want to see us break through a level and then give back a lot. I want to see us kind of like hold, find some stability, and then that kind of sell absorption gets kind of soaked up, and then we're buyers are back in the mix now. I don't want to see everybody getting out of profit taking and then just the price drop $2 or something.
Yeah, if it would have came back through and that 155 level came back on as strong as it did, and it didn't absorb and just broke through, I would have been out.
Yeah, exactly.
Like that means I'm wrong. Like I'm wrong and I'm not seeing things right. Let me go find another trader, do something else.
Well, your initial trade is good, but your continuation bias, it's not there. Time to move on. Cut the losses. Look for something else. Yeah,
and that's the biggest thing. It took me several years because I come from I'm a pharmacist and I come from a profession where like I can't be wrong at work. I can't be wrong during the day or I might hurt somebody.
Yeah, literally.
But with trading, you have to be okay with being wrong because you got to understand when you're wrong and where your stop is, and you just have to get out. You can take the trade again when it sets up, but if you can't get out when your stop says you need to get out, it just throws everything off for me.
Yeah. We got a question in YouTube from Zachariah Tuck. What other software is it that you're using there? That looks like TWS. Is that correct?
It's DOS Trader.
DOS Trader. Okay. Very similar visual. So
I like their time and sales and I like their charts.
Yeah, they have a great product.
Yeah. So I use DOS Trader.
I used it for a couple of years. And then I moved away from it to a couple of other products, but that's just because it was free in those products. Free is something that's exciting to me.
When you're a trader and you're in a zero-sum game, like anything you can get for like less money, free, take advantage of it. Like if you can use it and have to pay less, take advantage of it.
It's something that I've heard Bruce mention. I've mentioned myself. David's mentioned it. Buy the tools you need, but don't buy everything. Yeah.
Yeah.
Get used to the tool, and then once you've kind of gotten used to the tool, then expand your repertoire a little bit, then expand out a little bit. You can still watch and see what other people are doing and file that away for eventual use case, but it's great from that aspect.
Yeah, and I had been using Bookmap off of Thinkorswim,
Yeah.
and I loved it. It was great, had everything I needed. But I always tell people, I'm like, Bookmap on like Thinkorswim or Schwab, that's like getting like a really nice base level Ferrari. But if you get
So-
the full program through Bookmap, that's like your decked out Ferrari that you really want. That's the V12
So I
LaFerrari.
traded
with
initially
all
off
the
of platform.
options.
Yeah. I joined Bookmap with the platform itself. And I decided, okay, well, I'll give the Thinkorswim version a shot on the side because they offered it for free because I made a certain quota of options trades or whatever. So they offered it to me for free. So I had them both side by side. And it's good for what it does, but it is woefully inadequate compared to the actual platform itself.
Yeah, I agree. But if you just want to see where the orders are
it's
and
good.
identify that for your trades, it's great.
It's
But
a
if
good
you want
entry
to
level
get,
product.
but if you want to get detailed, like I zoom in and out of Bookmap all day. I change the settings. I'm looking to try to find the liquidity I'm looking for. If we're having an area that we're struggling with and I can't find it, on a technical level or a trending average on my chart, I play with the settings and then I keep an eye on it.
So I'll probably have you next week because I think we're doing a couple of rotations. I think we're staying with like the same rotation for like 2 or 3 weeks. Next week, we'll be going over the trade we talked about today. We'll be going over from both perspectives, my perspective and your perspective. So look forward to that. So if you can make it next week, that'd be great too.
Yeah, and I have on my YouTube channel, I have this full, I have the recordings that I took of this trade, the full recordings on my YouTube.
I saw
channel.
those as well. I'll link those. They're in the notes that I have to give you at the end. But yeah, your YouTube's in there for everybody else to see as well. It's great stuff. Also, you posted on X as well for one of these. Yeah. So it's great. I don't know if I have you on X. I need to follow you, so I need to double check that.
Hey, Valley, I have a few questions whenever you guys are ready.
Go ahead.
No, I'm really curious because the way that you're describing, it sounds like you've been trading for quite a while, and then Bookmap really enhanced you. But I'm wondering about I've never seen someone scale out so much. And then I really like seeing the scale ends here. That's fantastic. But what's the what percentage are you scaling out on the way up? And what are some of the decisions for that? And I guess it's working well for you. It depends on how you trade, because someone could, like you you're making money with it. Another person, if they get a few large stop outs, and they maybe get some winners, but they scale out of those, they'll still be a loser on the overall.
The biggest thing is I trade off cams, and I have a specific system I use. My mentor Thor Young, he wrote a book about trading the cam system, and he's amazing.
The large stop outs in that specific system are very few and far between.
Yeah.
It's basically the way it works is you do need to scale more often because you can get a sudden reversal midway, but by that point you've already scaled probably half your volume, so it becomes a net zero essentially.
And for me, I don't need much to hit my daily goal, and so I'll get an entry, and then I'll really look to partial in on a quick move, and once I get to my daily goal, then that's when I start looking to add and get the max out of the trade that I can.
Because you're already in the direction.
Because and I've already got my daily goal. So even if I add and I break out, I hit break even, I'm still done for the day. Like on this trade, I got to my daily goal really quick. I got my profit locked in really quick. My break even was really low, And that like lets me sit back a little bit and say, okay, I've got this trade under control. I'm reading this price action on this trade pretty well. And I can add, and I just like to add on pullbacks. I like to find areas of liquidity on Bookmap that match up with a technical level on my chart. And when I see the absorption I want, I like to add and go in. On this trade, I missed three other ads early on.
The pullback
Just-
at 165.5.
I do, because I when I on longs, when it pulls back, I hit the bid to get in to get the few extra cents.
But the bid widened too much for you?
No, I hit it, and I was a millisecond too late on 3 and just didn't get the fill, and then it went for me. And I don't chase. I want my ads low on the pullbacks rather than like, I'd rather add small on a lower pullback than bigger on a break into another partial, because I can get more RVR off those shares.
Yeah, because you're
I
using
like
shares.
to add lower. Yeah.
Yeah, you're using shares, so you're getting hard deltas versus soft deltas with like options and stuff.
Yeah, so
if you
like
ever-
you're circling right there, those are the areas like I like to add. If it pulls back to a technical level and I find support and I see the absorption I want, I'll add.
There's one missed on it's right above the word add. That's one of the ones that he missed.
Yeah, just a little bit above that. I was kind of upset about that one because I literally missed it by maybe a millisecond. Hit it.
For
and
the
it just
strategy,
didn't-
it's a perfect ad. Yeah. Yep, I see exactly what you're saying there. If you ever transition to options for capital efficiency, it gets a little different because you can't scale as often because you need those deltas to build up a little bit to get your momentum.
Yeah, I actually took my first options trade today.
Oh yeah?
Yeah, I took a Q options trade on a little breakout. I have one of my other mentors.
Congratulations.
He trades options for day trading, just for leverage and everything.
Yeah, it's just capital efficiency. That's all it is.
Yeah, and he's been working with me. He trades SPX and options.
You can use the same systems for the most part. Like there's not too much difference. It's just capital efficiency. It just makes it a lot easier because now I don't need to keep $500,000 in my stock account. I can just trade options with it and they settle, and I'm not worried about it because it's a margin account. Whereas
and I'm all about profit for effort.
Yeah.
Like I don't know if I could manage my risk much better than I do already.
No, I think it's pretty good. I haven't really seen. There was one. I was looking at one of them. I'd have to pull it up again. That I was like, oh, this isn't the greatest. I think we talked about it though in DMs, but I don't remember. This is great. This is a great setup. So make sure you post your options trade. I want to see what it was in the queues if you haven't already.
I will. It was on. I was doing it through Schwab just because.
You could just.
It was just like
the way you want.
10 contracts, but for some reason they didn't post my actual like entries and exit on there. So I was like, oh, I can't share this. Like
the Schwab interface is a little different.
Yeah, so I need to link it to my DOS so I can get direct access because the fills were taking like minutes to happen.
Yeah,
like I would put it in and it's like hitting. I'm like, why am I not getting filled? I have one contract. Like why is it not getting filled?
It's a very interesting situation with the migration from TD Ameritrade and Schwab, but that's aside. Do you have any other questions or comments, Bruce, by chance?
I do. I don't. David, do you have any as well? And we should probably move on here. I love it, Vale. Fine, great stuff, but we got to move on.
Yeah, thank you.
Sure.
Great trading for sure. So well done. And it sort of chimes just ahead of the call. We were all talking about an Nvidia trade that I've been running all week, and I was saying I traded often like futures where I've got my exits, my partials in there like similarly to where you're showing it at the round numbers. But that Bookmap chart is one out of the tech book, Bruce, isn't it? Because as it breaks through the levels, as we can see when we get to like 154. You can see very quickly support liquidity is then building once it's breaking through. You can see at 155 that when it starts to fade, when it gets through that level or just before it gets through, the liquidity has pulled back, and then above that at about 155.70, it's also pulled back. So it is textbook in terms of telling you what you're doing. And as you said, Jack, in terms of times and sales, as you know, I have to post a fair bit on TNS as well. This is visually being able to see what is going on is fantastic. It really
Yeah.
is. So yeah, it's and it's an back to a similar theme again in terms of sort of leverage and so forth. And sure, it's easy to say trading stocks. You've got you need a fat account for sure. That
Yeah.
all said, and it's easy to say that all said, David, is that when these big stocks start to move, they are a joy to trade compared to an indices that just goes around like a bumblebee or a wasp or whatever it is. And
Yeah, it might be going sideways.
yeah, but this is great. No, great trade.
Like I had a nice. I was sharing it with Jack and talking to him earlier in the academy room. I had a nice breakout to R6 today on AMD. I was in one of my trading group, my option mentor that he does. He was having a trading, and I live shared. He was like, "Let me see Bookmap and everything and how you use it." So I was live sharing that trade on there, and I took that breakout. I was like, "This looks pretty good. Let me take this breakout to show him what a breakout looks like." Beautiful, amazing breakout right to R6. And then while I was sharing and talking to it, I was like, "If this goes to R6, I'm going to reverse this for an R6 reversal if I see what I want." And then I reversed it, and it went all the way down to R3. It was just a
came in the
beautiful
last segment of my trade long, where I ended
Okay.
up getting out. That's when he turned around and reversed. It'll be cool. We'll talk about it next week.
Perfect.
It'll be cool.
Yeah, I'll notate it up and I'll post
Yeah.
it up. It's a pretty sweet.
We'll talk about it next week. It'll be great.
Just a few order flow details. It's kind of smaller stuff, but I mean, I think it matters. As David was pointing out, resistance turns into support, and you see the strong breakout through it, the test back to it. Here's some. There is some liquidity in there too. It's this is a higher time frame, so it's kind of hard to see some of that stuff. But also, this one's really kind of key here. It's an important level because of this high liquidity here comes in again, and then it breaks through, but it doesn't break through by a whole lot. I mean, because a lot's being absorbed here. But then look at this guy here again, still fighting it, on the offer. Some of it's lifted, some of it transacts, but this is where you get that insight right here for this continuation on up. But you can see though, like due to, at least in my opinion, due to all of this kind of activity in here, these areas start to slow down. You don't see the same kind of like aggressive buying like you did on the way up. So, and you start to see this kind of rounding, right? So just something to note that because it's being traded, it's being absorbed. I mean, you're not going to find more buyers at the highs, but this here, certainly this was a great ad in here, and you saw it's not nothing but buying in here because it's delta, but on the overall there's more buyers off of this line. Great, just great. It should come back up. It
matches the impulse reaction setup too.
Yeah,
which is something that Rob is going to be I'm going to be talking about with Rob here in a second.
Yeah. Vale, what happened up here? I mean, is quite a bit. I mean, same price level, but you can see the divergence in here. Did it break 155 before coming back up, maybe? Or
I'll tell you. I'll post the middle part of this trade because a lot of times my trades just end up being a number of other trades after the original entry.
Yeah.
So I played this original entry off this S4 reversal, and then reversal. And then the ad became part of opening range breakouts I traded. But as we were buying so heavy all day and it had gapped down so far, and I knew Google had earnings after the close. So I kept zooming out of Bookmap, and I saw orders way, way, way high, way over all-time highs that continued to build over and over all day long. So kind of as we got this breakout up through that 156.50 level, and then when I added 155 and it held, I started preparing for the earnings play breakout. And I've got several screenshots of some of the other trading groups that I'm in where I said, this is looking a lot like my Tesla breakout from a few days ago, and I'm going to play this into the close for an
It was-
earnings breakout.
It was a really strong gap down that just reversed
And just
from the get-go.
nothing but heavy buying all day.
Yes.
Anytime we broke resistance, we came back, tested, it held, we broke higher.
Yeah.
And
like
so
you said, there was orders. I remember seeing orders all the way up into the 185s, 190s. They weren't as strong as like the 170s, but they were still very strong. So we can look at those if you post those next week. We'll take a look at
I'll
those.
post that up this week or next
So
week.
the-
I'll post
the
like
next
the
guy
middle
we've
and the earnings
got-
play.
Is Rob.
Yeah,
Rob
thank you, Vali.
Rob is next here. So Rob has 3 images, and again, I kind of want to just kind of talk about these images. I got some notes that I'll put in that I've already copied and pasted. But the first one here, it's a really great setup. He's annotating it essentially. He annotates that big, strong impulse move. He's got it in a giant circle there, and then you can see that pullback. This is something I've covered a couple of times on my own, and it's that pullback, and it retests that pullback, and then you get that breakout entry. And he's really got a great spot where he's annotating there that would be a great entry. He's got it blocked off. It's the third red box from the left, Bruce. And he's looking at a breakout that's essentially going back to retest those previous levels and then essentially to see if he's getting some continuation further. There is one little thing that I want to kind of call out. That block, that circle on the bottom right is not a spoof. A spoof you would expect as order flow is coming to it to move out of the way. And actually what we see here is that the orders not only don't move out of the way, but they start stacking a little bit to a degree. That's more supportive liquidity than necessarily true spoofing. For spoofing, you would want it to kind of just dance around and then get out of the way and maybe have minor interaction. But this is really supportive order flow, passive liquidity there. And then you get your continuation on there. And you're notating your point of control shifting higher. You've got your higher liquidity as your targets there. This is great. This is exactly what you want to see, Rob. Remember this, because as we go to the next two, they're not as pretty. So let's go to this next image, Bruce, if we can here. So on this one, I feel like this was a little bit impatient here. You've got a nice curl. Bruce mentioned the curl before. You can kind of see it here, right? Like you see that kind of curl go into flat, and then you see the downturn setting up. Now, you entered aggressively, but you still had conviction, so you re-entered again, and you ended up getting your move. A good way to do this is once you get that breakout, if you're not necessarily wanting to be aggressive, wait for that pullback. Be patient. If that's not a key level for you to take your short entry, just be patient here on this one. Because to me, it does feel like you're just kind of aggressively chasing on this one. And I read these kind of back to back to back, so maybe I was a little bit biased because the third one, we're absolutely chasing stuff. If we can go to that one, this is the one I want to talk about the most. So this right here is what can happen to you, right? So you get that curl, you get a nice little setup, and you're looking to go short. And what ends up happening, instead of going short, or instead of price continuing short, you get a range. You get not only a range, a vicious, choppy range. Sorry, I got the dogs barking in the background. 1 second. Okay, he listened. So here, you're kind of playing around in chop. I highly recommend you avoid chop. Avoid it like it's the plague whenever you see this. This is reminiscent of an impulse pullback. You get the resolution for the micro trend, and then you get your continuation long. Similarly, if you take a look at this kind of more of a zoomed out approach, what I see is a Wyckoff spring to the downside. You get that nice little trap in the top right corner of his box there, Bruce, that kind of breaks that range. It's a purplish circle. But you get that kind of breaks the range, and then it melts down lower. And that's really kind of reminiscent of right there. Reminiscent of kind of some of the stuff you see with slowdown setups. Like he looks for that, and then he's taking his entry in the opposite direction, essentially. Now you get the entry. We can see it on the edge of the right-hand side of that rectangle. but this felt really aggressive and you're chopping around in here. I would avoid this because this will frustrate you. It doesn't matter if you end up making money on it or not. It will mentally exhaust you. Bruce, if we could zoom down to the last image, I kind of want to point out some of the elements here that are kind of setting up. It's the same image. It's just I want to point out some of the highlights here to it. So in the yellow from the left, we've got that strong impulse move down, right? It's very clear what the impulse is. We get the pullback. We get kind of that necessary consolidating pattern. So at this point, once you've broken that downtrend channel, you want to see some resolution in your current direction, unless your strategy is looking for a reversal off of that level. If you've already predetermined that, you might get that V pattern. David and I were talking about something similar earlier today. In this case, that's not your trade right now, right? This is a short duration trade in the short direction, not necessarily a reversal. So you're fighting the chop here, but all that chop is going to do is essentially fake you out. You can see the two fake outs to the downside in the red, yellow circles, but you still need the resolution of that pullback before you get your continuation breakout. And you can see in the yellow arrow there on the right that where you ended up entering is exactly where that choppy resolution ends for your downturn and for your continuation there. So kind of if you're going to use impulses and you're going to rely on them to some degree, and you're going to use pullbacks to try and enter, make sure that it lines up with your confluence. Don't try to reverse on a reversion trade on a strong impulse move down. It's going to tend to chop you around or end up beating you up a little bit. I do think we have Rob here, right?
Yeah, I'm here.
Hey, buddy, how are you?
Oh, good.
You see what I'm talking about with this kind of like I added some notes to your image with my notes.
Oh, yeah, that one just slapped me around all over the place. It was frustrating.
Yeah, I kind of figured as much.
And the hard thing is, trying to figure out where does the chop end.
So one of the ways that I look at, if you kind of look at the impulse reaction, so you get an impulse move down and then you get a pullback. At that point, you're looking for one of two things. You're looking for the impulse to be resolved or the pullback to be resolved. And what'll happen is if you're going to get the impulse resolved first, after that pullback, it'll immediately try to make another low where the previous low was. You don't see that here really. So in that case, you're waiting for what I call the micro trend or the pullback to resolve. So once it kind of gets to that point where you can see consolidation, then you get another continuation and a breakout, you can take another long entry from there. You ended up taking basically it's maybe a second or so early, but it's a good short entry from there because you've got the test back at the previous highs. It's rejected. It doesn't want it. So now you can take that downtrend and look for another impulse leg down. And that's essentially the second leg, right? You got the first leg, pull back, a little bit of consolidation, and another leg. And after that, you're just looking to see if you get some continuation or not. So, but this is the way I would look at it visually. That would help you with that. And you never want to enter chop. And this is what I was talking about. I've talked about it a couple of times. Reversion trades are dangerous because they're counter trend, right? And you saw that right here. So, but your first trade was really great. The first one that we covered, it looks at it exactly the way you want it. You get the pullback, and then you're looking for the continuation out of the pullback. So,
yeah, we've had a lot of chop. Like today, I wasn't able to do much of anything. I wasn't able to, like the last 2 days, really. I haven't been able to figure out anything.
So for one thing that I would do is it doesn't really matter like what style you trade. Like I said, for me, I like confluence off of levels. I like to have a predetermined kind of level. It doesn't matter if you use time base or some sort of number level. Have a reason for it, right? And then have a bias going into that level. So like I expect price to move to this level. And once it moves to this level, I expect it to break, pull back, retest the level, and then go short from there.
I find when I have some kind of bias, when I'm looking at, because I also use Trading View for my higher time frame stuff. And then I start thinking, oh, it's because this is hitting VWAP or the standard deviation or, blah, 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 whatever. Then I have some idea, I'm pretty sure it's going to go long or short, and then I'm not looking at the order flow,
Well,
just as the order flow anymore.
well, you
I
wanna
have
use
some
both.
kind of bias.
Yeah, well, your bias can come. I have bias when I start the day, regardless of whether I'm order flow or not, right? Like I have a bias, and I'm looking to see if the way order flow works resolves to my bias. Because you can read order flow all day, but if you don't have a bias, you don't know when to enter. You don't know what criteria you're specifically looking for. So having that bias initially and then seeing if order flow matches will allow you to kind of avoid a lot of these choppy kind of sensations, Like if your bias was that price on this trade was supposed to go to 52.47, break, retest, and then go lower, your bias would have been broken immediately, right? Because you didn't get to that level. You got to the level, but you didn't break it. You pulled back before it, So biases help in confluence with order flow. They're not meant to be, don't just take a trade off a level, use the level to give you context to basically narrow your lens for your order flow. Does that make more sense?
I'm not sure I understand fully.
Okay, so if you're going to have a bias no matter what when you enter the market, right? Let's say it's a gap up day, right? Are you going to try and trade short? Probably not. If there's strong momentum in the morning, you're probably not going to try and look short. You already have a bias, right? So that bias is what you're anchoring your mentality off of. So now you're looking for order flow to see if it matches your bias. In this case, you're short, you're looking short, you get a pullback, and you get some sort of choppy reaction. From this point, you're looking, okay, well, we're either going to reverse higher or we're going to continue short. My bias is short. So what am I looking for order flow to give me the confluence to trade short? And in this case, you arrive at the very end, but you got a little chopped up in the middle. So you want to avoid the choppiness in the middle because it doesn't match what your bias was. Does that make more sense? And Bruce might be able to jump in and help out too if you're not gaining that one. But that's the way to kind of look at things. Higher time frames are great. We see traders use them all the time. I recommend using them all the time, but you need the order flow. You need to get the order flow also in there. But don't be afraid to have the chart side by side.
Yeah, at some point, I would like to be able to do it kind of like how Bruce does. He's just almost doing it entirely in the order flow.
Well, Bruce has his higher time frame off to the side every time. Every time I've checked his stream, he's always got his higher time frames off to the side. Bruce could correct me on that if he disagrees, but he keeps an overall picture from what I understand.
No, Bruce usually keeps. He kind of looks at it for the overall day, and then just look at Bookmap.
Yeah, so you've got your overall mental picture, right?
Yeah, and Bruce is pretty convinced that all of this stuff is order flow. On the monthly chart on down to this,
I would agree.
a billionth of a second.
I would agree.
It's all really about order flow. So Rob, I really like hearing that from you.
Yeah, because I keep thinking about when you were saying that, just all of these indicators, everything else, everything is just order flow.
Yeah. I mean, when you think about it, moving averages are essentially order flow. Like all you're looking at is essentially the volume of trades, and you're just trying to see when can I get in and be comfortable with my entry and know that I'm entering in the right direction.
Yeah, and that's where I think I hear you, Rob. You're looking at your lines on your higher time frame chart. If it's VWAP or POC or whatever it might be, it can be disorienting because you don't know what's going on around those lines, and then you're trying to figure it out. Yeah, I was just kind of joking with that talking myself in the third person, but I kept on hearing Bruce, and I'm right here, Anyway, yeah, it can be hard, and you just kind of make it up, or at least I do, by looking at some of the candles and go, okay, well, I see some wicks up here, and then price failed. Like, I know that it retested up there, and I know that it's failing. So therefore, I'm assuming that there's a lot of sellers coming in, or there was a lot of liquidity on the offer getting filled. So let's look at Bookmap and confirm that.
I'll be honest, I don't use VWAP or point of control or any of those things. I have a trend indicator on my external charts, but all of those things are on Bookmap. So I don't even look at VWAP on TradingView. I look to see if like the trend direction is right that I'm looking at. I have my opening range on there because I like to match the numbers because sometimes they are a little slightly off. Other than that, it's just a trend direction kind of thing, and Bookmap is the driver. And from there, I'm just narrowing in on that.
But well, it's kind of like when I see point of control move. To me, that means okay, you have all this volume that came in, and they're kind of a consensus that price has moved up or down.
So
it's a hard one. There, it can be
yes.
tricky.
So this is a great example
like
of
the
how
consideration of value has a, the participants are saying, hey, the overall value of this thing has gone down or gone up.
Yes. So in this particular kind of setup, and you'll see this a lot in any kind of chop, you'll get steady VPOC down moves on like a short, right? But when you get consolidation, you've got a heavy amount of volume consolidating in that area. So VPOC might migrate slightly up before it continues to reverse down. But all that means is that there's a lot of volume in that general area. Just because VPOC migrates up after it's moved down does not necessarily mean that that's a bullish indication, right? That just means that in that general range, you could be oscillating a little bit. And in this picture, if you took away all of the volume dots, I could basically draw what I would think that it would do. And I would assume that it was a strong impulse down and then some choppiness and then potentially going down further again, right? Because the way VPOC is. And that's all it's telling you. It's just telling you kind of what the volume of the orders have done.
Yeah, and you see those ones where I went long. I don't know what I was thinking there because there's that big impulse there. Obviously, the thing is moving.
I promise you this
it's
right
bearish.
Now. I promise you this right now. There are 4 of us in this current voice chat right now, and you are not the only one that has done that. Because I guarantee you, I have made a trade today that I was like, "What am I thinking? This is a terrible entry." And I had to take a couple points of heat, and then it goes in the right direction. But it was a terrible entry,
Oh God, I hate getting in this chop. Yes. I wish I could just, get those clean continuation moves and just.
Yeah, but we all want that.
I just get caught in this crap that's like no good.
But
this chop.
Think of a few things here. Like number one, like what Jack was saying earlier about this strong impulse move. I mean, this happens. You look on the daily charts. There's going to be a big strong move, and then probably a week's worth of chop, or at least a few days. This is the same thing. So you can kind of anticipate some of that. One of the things I do want to mention on this, and maybe we can go a little bit further, but we got to move on. But like. Rob, maybe something that like you're learning here, but you applied earlier, but you didn't apply in this one, and that's like what Jack was mentioning on your first image. Let me just go there for a minute.
Yeah.
So this is fantastic. It just warms my heart to see this. That you're reading the transition. Rob, so you can see it. Look at it, like here's your kind of peak, right? Well, look at the volume over here compared to the volume over here, right? I mean, and maybe you don't know that, but you kind of get a pretty good feel for it in here. Know it, right?
So you get the same kind of topping pattern.
Yeah, and you can see you're not getting buyers up here. And then here, let's just zoom in a little bit because
Yeah, I could see those buyers running out of gas, and then I saw
exactly.
that point of control move down, and I can see
Mhm.
more sellers coming in.
And look at
And
where
I could also hear on Market Pulse more of those negative beeps. And I
yeah.
was like, okay, I think when it hits that point of control, it's going to pop off, and go down pretty fast.
So I think that your initial entry is just aggressive. I don't think that there's anything wrong with it. If you have a solid ability to kind of withstand it, which you did in this case, I think it's totally fine. I would have waited just a slight couple of seconds, but that's just because I like to wait for pullbacks. But both of those entries are great. Both of those entries are really great. You waited for the consolidation to end.
I mean, there's a few other like details, Rob, just to note, and I mean, just the overall big read though is the most important, I think.
Yeah.
But it's the first retest of this area here where you did find those buyers, right? And it had been chopping in there since. So I always try to look for a pullback off on the first test.
Yeah.
But the other thing that can be dangerous because a lot of times you might miss it, but it doesn't, market doesn't care, it just goes. But another thing too is like someone's selling here, someone's selling here,
Heavily.
someone's selling here, right? I mean, they continue to hit it, and then they're following through here. So watch it, and you can also compare like down in here to the volume up in here. So your CVD is going to be cratering, but I think your beautiful read on this kind of overall, this is great because we want to see that transition. And this is that criteria that we've been talking about for a long time, that all of this in here kind of adds up and allows you to read and grab a good trade.
Yeah, part of it's auditory, so it's hard to express it in a screenshot, but
No, you did
you can
fine.
you can kind of hear it in Market Pulse as the buyers start dying out.
That's
Yeah.
And
that's not on you to annotate. Like you did great annotating it. You highlighted exactly what you're doing. That's on the coaches to understand exactly what you're saying there, or to ask for clarification. I think you did fine telling us that.
And
If you just circle Market Pulse down there, I know what you're looking for, right? I think it's totally fair to expect that of us.
yeah, nice, Rob. This is really like a transition for you, I
It's
think.
steadily improving. That first picture was really great too. The very first
Yeah,
one.
yeah, and lately I've just been doing one lot, and
Nothing wrong with that.
this month I've had the best risk control I've ever had, because I'm going, here's the criteria,
I don't know about
and
Brisk, but I love to hear that.
if something is off, I'm out immediately. I don't want to, if I don't want to lose more than maybe a point
I
or
am
something.
all about risk metrics. I am all about it.
And
In
I
my
mean,
opinion, the best way to make money in this market is to limit how much you lose on a downturn. I think that is
yeah,
the best way.
and I just keep remembering everybody saying like, hey, if it doesn't work immediately, get out, wait for another one.
Yeah, I mean, if the way your trade criteria sets up, if your trade criteria is invalidated after your entry, you were wrong. It's okay to be wrong. Like Veilfan said when he was up here, you have to be okay being wrong sometimes.
Yeah,
I'll
I
post a
do
couple of
get
my
faked
trades over
out
the
quite
next
a
couple of
bit.
days.
So.
I'll post mine, a couple of losers that just didn't work out for me the next couple of days.
Yeah, I do get faked out sometimes where I'll exit too early and then it'll just take off without me, and I'm like, oh man, why'd I
So that's
get
where
out?
journaling comes in. That's where journaling comes in. So document why you got out, and then see if you can over time figure that out so that you don't get out. And that's
All
where
right.
journaling comes in. Does that make sense? By
Yeah.
documenting what's going on in your brain when you got out, you'll be able to identify what it is you're seeing and see over time if it's worth it to get out there or if it's worth it to continue on. And that's just risk reward, right? But that's just balance. And any one of us will help you with that as you document it, right? But we can't document it because we don't know what's going on in your head. But if you put it on paper and say why I got out here, we can look at it, you know?
Yeah.
Yeah, I guess I have to do that immediately afterwards, so it's still fresh and I remember, what was going on. Sometimes I get to this stuff later. I'm still trading. I'm still looking for trades, and then I don't get in
because I just beat myself up. I curse myself out because when I get out because I see something that I didn't necessarily like, I trust myself. But there's times when I look at it, like I get a second set of eyes on it, I'm like, this was stupid. And for me, my mental process is I bash myself in my own notes on my own images. And I say terrible things about myself, like I'm an idiot, except worse words, Marine Corps words.
Yeah.
However you want to do it, just annotate it, annotate your thoughts, why you did what you did. And then from there, it's easier for us to work with. And anybody would be happy to help with that.
Yeah, I just got to get them down while they're fresh, because if I try to think about it a few hours later, because I'm still trying to trade and stuff, then it's like, then I'm like, oh, what exactly was I thinking at the time?
I understand exactly what you mean. But that was really all I had. I think that you've got a lot of good momentum going here, Rob. I really do. Seeing where you came from, seeing all the hard fought lessons and just working through the process is really working for you. So just keep it up, buddy. Keep it up.
All right. Yeah, thanks.
Thanks,
Appreciate
Rob.
the content.
Yeah, David, you were kind of quiet. Any comments?
Great trading, Rob. Great starting. Thanks.
Cheers. Okay.
I was listening. It's good. We saw that chop today, didn't we, on ES? We had that. The price was stuck within the opening range.
It was vicious.
It was right within those bars. It would test up and then bang. There's not necessarily a lot of advice I'm going to sort of pour onto it. It's often the usual thing I talk about. When I eventually realise, and it can be eventually realised, we are in that chop phase, then I'm looking for some decent move on a tick chart. So I'm looking for that pace. You also, as you're all talking about, you will hear on the market pulse, you should see that. I'm looking at my time and sales. And then I'm using my stop limit orders or just a stop order well above that chop amongst some of the other voodoo that I'm looking at to see that it's breaking out. But as you said, Bruce, as Jack said, it often will get slammed, but it can be very difficult. On that one chart there was a nice blip up of green volume, nice fat bubble. I think it was within the second yellow circle, and that in itself, okay, easy to say with a bit of hindsight. That's the chart? Yeah, it was a bit of a tell. So you got a lovely green bar there coming in, nice fat green bubble, and the price doesn't really move.
Right.
So my volume price analysis is sort of, I call it fundamental. Again, it goes back to my forex trading days, really. But where a lot of effort's gone in and the price doesn't go anywhere. But on that area there, I wouldn't be looking to get in until we were clear, and I said I'd be using a stop limit order or something above and so forth, with some other mixes to get out. Remind me, you're a few hours behind New York, aren't you? You're on the west coast, Rob?
Oh yeah. I'm over in Las Vegas, so I'm Pacific time.
Okay, so this is getting towards the open, isn't it? You're 2 hours behind.
Yeah. 6:30 is open for me.
Okay. So that's worth sort of, yes. We are actually
into regular trading hours. Yeah.
Yeah, into the thick of it. But yeah, it's not a lot of words of wisdom in terms of that chop. Yeah, no more than I said what we saw today, didn't we, Jack? Saying it again. But today it did break out. It scooted down and it was a stop run, and it just moved at pace. It sort of woke us all up, and then it quickly came back up through this whole chop area and went up.
Yeah. Good stuff.
Yeah, I'll also chip in about the VPOC and VWAP, because I'll always say I'm not a VPOC or POC or VWAP trader, but I do have it on my charts, and it's a bit like with my spot gamma sales hat on. I view all of those voodoos, witchery and other things I like to call it, as sort of black ice warnings. So I'm not specifically looking to trade off any of those levels, but I'm aware of those levels, I respect those levels, and then I look for a reaction on those levels, albeit that is sort of quite contradictory in terms of taking trades off them. And certainly in ETH, as you all know, I'm currently living in the UK in Cambridge. I find that those levels, deviations on VWAP and so forth, has a lot more significance. And I think that's perhaps there's a lot more sort of, whether it's machine trading, algo trading or something, that is easy to write programs to, because they're all formulaic. Those retrospective indicators, whether EMAs and so forth. So they're on my charts. That's a long simple ramble for me, Bruce. Back to you, sir.
Excellent. Thank you, David. Thank you, Rob. Let's move on. And David, did you have a Notion file?
I didn't know. I got over my skis, I'm afraid. I made comments for Laura and Alan, but I didn't do a Notion file, so my bad. But if those traders do have a look on their Google spreadsheet, they'll see I've added it in a comment box.
Okay.
On Laura's great. I did a couple of charts there and a couple on Alan, so my bad.
No.
Laura is a recent Blue Jacket winner too.
Yes, very true. But very happy if either of them want to catch up. DM me, Alan, if you want to do a Skype sometime. Again, sir, we can add you the fat. Then we'll probably talk about cars and other things apart from trading, I imagine.
No, Laura's just been cranking out the content. So there's some good stuff to go over with her for sure. I wanted to make some comments earlier in the week and didn't. Rob, though, I've got Robbed this week, and he's just been doing great. I mean,
he's been doing a really great job.
Yeah, just
really,
great.
really great annotations, really great notes when he's following up on his trades. Just really great journal work.
I mean,
it's what I like to see.
Exactly. I mean, Rob, way to go. I mean, it's been like you can see you're turning the corner. I mean, it just, I go with this image from Slowdown and his progression here, and again and again. But we need to kind of get a feel for it. When we first start off, we're annotating a lot of different things, just understanding elements. Then maybe a couple months later, you're refining it, understanding these elements in context of other important elements, and you're starting to really kind of just refine this process, and then that leads to studying a setup and and only taking that and knowing it really, really well, you're in this part 3 now, and starting to define your setups. You're grading them. You're adding in here what you think about them as well, and you're being objective about it. I mean, I think this is something I was talking with Dan earlier in the week about, and it's for a bigger discussion, but I just want to mention it here. I think is the we see a lot of people like Robbed or others that there's a kind of self-reflection off of their trading, and kind of turning it around, looking at it in different ways, and not just getting all upset about it, and then doing it again and getting upset about it and doing it again and then giving up. I mean, they're kind of like, I don't know, just reflecting and thinking off of it. It's a really great capability or asset to have for your trading, and you kind of turn the corner and are able to learn from it. And it seems like that seems to be a habit that a lot of traders have that start to do really well. So anyway, like I said, I just wanted to mention it and not get into it too much. But Rob, God, there's so many to go over that are great. I picked this one, and I was just going to let you talk about it. So and walk us through some of the things that you saw.
Yeah, sure. And thanks for the kind words, Bruce. I really sincerely appreciate that. You coaches have been just great assets in my journey to becoming a profitable trader. So thank you.
Yeah,
Yeah.
well, it's subjective. I mean, like it's fantastic. So yeah, you earned it.
Thank you. Thank you.
Definitely.
Yeah. So this trade was, man, such an awesome trade. I was really proud of myself for this one. So that was a range that I had drawn out on my chart. Those light blue dashed lines. If you This was yesterday, so the market had gapped up due to God knows what, how inflation, blah blah blah. Who cares? So market gaps up. It was kind of bouncing around this range. I caught the bottom, rode that to kind of the top, and was looking for a breakout. My strategy usually is to wait for high volume to pop out of the top of the range. Sell, in this case, it's a bullish breakout. So I was looking for sellers to drive price back in, and then I would place a buy stop order right above the top of the range and write it to the top. But in this case, when sellers drove price back down to that range, this just brick of liquidity popped into the book. And something that I've been working on is trying to frame the price action that I see in the whole market auction theory, just the how the market cycles through, value, imbalance, and then rejection of value and searches for a new balance range. So in this case, as price was coming down to that brick of liquidity, I was looking for is okay, what's going to happen here? Is value zone going to be accepted or is it going to be rejected? And if it is rejected, who steps in? Who's the aggressor? So price came down to that brick, and if you look at the volume, you can see that selling was very muted. And it's
Right in here, right? This is what you're talking about.
Right.
Okay.
Yeah, exactly. And so if you look at the volume bars, the selling is very low. There's not a whole ton of like really large sell dots, and then the buyers just step in. And once I started to see the volume start to pick up aggressively, started to see those buying dots get bigger and bigger, I took an early entry there. So I came in with my first entry, put my second entry just a little bit above. I think it was maybe, what
Oh,
the heck was my second entry?
wait, I'm a little confused, Rob. So I do see an entry up here, um, and then I see
That was
one
oh,
here and one here
that was
too.
my first stop out. I tried the breakout there, but I got stopped out.
Okay.
So that entry's gone. There should be a purple.
Right, here it is. Here it is. Yeah.
Yeah.
Okay.
So that one got stopped out. But then when I saw that brick of liquidity come in, I decided to get back in.
Right.
Right. So I got in right there. I put my stop right underneath that brick of liquidity. So kind of put it around, what is that, like 52.96, 50-ish,
Yeah.
around there, and then just row the breakout. I put another runner right around 53.01.75, another add, or I legged in right there with another addition. And then I partialed out a little bit higher. That was just because the overnight high was there. There's a ton of liquidity. And then I just held the runner and just swung for the fences on it. And that's why you could see in the bigger picture, I kept moving it, dropped it a little bit, but I thought, there's that big bar liquidity just sitting up there. I'm going to front run it and see if we get it. And how I trailed this, I don't know if you could really see it, but basically how I trailed that runner was I was watching price action. I was seeing how the buyers reacted. And every time the buyers came in mass during that kind of breakout, during that uptrend, and there would be a brief little consolidation, and then the uptrend would resume, I'd put my stop right underneath that consolidation. Does that make sense?
Yeah, absolutely.
And so I was just kind of trailing it. And then all out around 53.12.
Beauty. Yeah, beautiful exit, and I love the moving of your take profit up. I mean, why get out and you see all this strength? And yeah, take it up to where the sellers are, and look for the next. Really nice. So yeah, makes sense. I mean, there's a lot of entries and exits in here. This is the one that is the A plus, or the one that in here, right? That you really want to cover. Is this trade here? The Yeah, I don't know if you want to, if there's anything on some of these that you want to mention, but like it looks
Yeah.
like a couple of entries and then like scaling out through here. Maybe you got stopped out on this one here.
Yeah. Yeah, the progression of this day is that first set of entries to the far left around 6:30
Uh-huh.
ish. I was looking for a breakout there,
Yeah.
and I got stopped out. Price reversed pretty hard. Then we came back down to, I guess I'm covering it, but I don't know what the price of it was.
No,
It
you
was-
covered it here. So you took
I mean, I covered it. I covered it with the image.
Oh.
52.87.50.
Uh-huh.
Like that's where the bottom of that range was.
Uh-huh.
I don't remember why I had the bottom there. There must have been something that made me want to put a bottom of a range there. And I think if I remember correctly, my thesis was, okay, so price is coming down to the bottom of this range, and underneath it is not much volume. That's where we gapped up from. So if we lose this bottom, my thesis was, if we lose the bottom, we could possibly fill the gap to wherever that the start of the gap would be.
Right.
If we hold with buying volume, then a good potential is to get back to the top of the range.
Right.
And if no one steps in, then we're just going to chop. So as we came down into that bottom, what happened is you had a ton of selling volume, but then immediately buyers started to step in. And that's something that I've been really working on, is just reading the volume. So yeah, there was a lot of selling volume for sure. But when I zoomed in, there was just so much buying coming in.
Yeah.
And something that you said before in one of your webinars, Bruce, was, when price comes down, is there acceptance? Do buyers and sellers accept this new value? And if they don't, who's stepping in as the aggressor? And in this case, the buyers are really stepping in. Tons of buying volume started to come in, consolidated briefly, but just seemed like a good setup for me to go long there. I know there was some liquidity in the way. If you look, there's a couple big bars of liquidity, and Powell was about to speak, but I thought, man, this just looks too good. So I went ahead and went long, and took it to the opposite side of the range. That second runner probably could have pushed it up a little bit more, but man, I just hate trading when Powell's talking.
Yeah. That
Just go away for a little bit, but
that's
but
tricky, very tricky, because you never know what they're going to say and what traders are reacting to.
Yeah, and he just says the same thing every time. Stay the course, blah blah blah. But yeah, I mean that was kind of the setup right there. Partialed out in the kind of in the middle-ish of the range, and front run the other side of the range a little bit.
Yeah. Great stuff. I mean, like and then going back in and the notes that you're making. If I go back here, you're grading exit, entry, overall, and this is great. Like that's what this Bookmap Academy is all about. So helping yourself and helping others along the way, getting some feedback, refining it with the help of the community to kind of reflect a little bit more, get a little more insight, and then maybe something resonates there. Yeah, nice stuff, Rob.
Thank you. Thank you. And I, just for what it's worth, one big game changer for me, where I think that I really started to turn a corner was um, Carmine. During his webinar a couple of months ago, talked about using the replay
Oh, right,
functionality.
right.
And I was just thinking, man, I'm really missing out on that. So I can't, I work a full-time job, so it's a little bit tough, but when I can, I try to replay my day and go over and find little nuances and little patterns and how can I improve my entries, how can I improve my exits, and just kind of replaying the day. And that just really has helped me catch these setups. For example, that brick of liquidity, that impulse move pulls back, brick of liquidity steps in. I've seen that before, and I've caught that in replay. So when I saw this again in real time, I was like, man, I gotta take this,
Yeah.
even though it's a slight riff on my strategy. Man, this looks good. The only mistake I made here is that every time I've seen that, they've been pretty big winners. So I should have scaled up here, but I'm not faulting myself for that too much. But that seems to be a real A+ setup right there when you get that pullback and just this brick of liquidity steps in. Seems like it's a good time or a good opportunity to swing for the fences on that one.
Yeah. David, any comments?
Beautiful trading, absolutely beautiful trading, and I love the fact that you got slapped like a boxer, like a fighter. You're taking punches, as we all do, as Jack talks about. We all take a blow, but you're swinging straight away, and that's so critical to making money in this game. It takes a while to learn that, but it's fantastic to sort of see that, and that price discovery, just running it down, as you said. There's not a lot of volume taking it down. There wasn't a lot of volume taking it back up with that sharp sort of V. And off she goes. So really good. Like all of us, working as you are on scaling in, scaling out, or legging in and legging out, and so forth. And perhaps leaving, easy to say about yesterday and the days before, leaving a runner that goes on and does a 20, 30 handle sort of move and so forth. But yeah, no, great trading and confidence building there. So fantastic. Well done, sir.
Thank you. I appreciate it.
Yeah. I mean, there was other images, Rob, as well, but we just covered this one here, and yeah, we'll go over other stuff the next time. And let's move on though. And DNT, got you. I've got Vinny, and let's see. Get this 1, 2, 3 VPOC migration here. So DNT, you're in here? So yeah, okay. All right. Well, I'm just kind of waiting for you to come in here. And maybe you're having some mic problems and you're joining. Okay. So let's see here. Liquidity comes in, stop run above, higher high, third higher high. Liquidity comes in the same price level, and breakout above the 1, 2, 3 pattern. Weak shorts may look to exit break even. So yeah, this is nice. Looking for that shift in the direction, and why don't you take over and kind of walk us through? I think it's just gonna be much quicker.
Okay, yeah, sorry, I didn't realize I was on mute. Always, right?
No problem.
Cool. So yeah, man, these analyzing these VPOC migrations has really been kind of game changing to me. As to how and trade it though is another thing. So what I'm realizing since last week was normally I look to trade the VPOC, or I normally look to take a trade in the direction of the VPOC. So this is a unique case where the higher time frame trend was up, and we had that, I think, like CPI or PPI news, and we gapped up. This was yesterday, I think. And this was just a normal, gap up, pull back to some support, and then continuation of the trade long. So this was a unique situation, but normally VPOC migrations, I look to trade in the direction of the shift. So the VPOC migrates down, I'm looking for a potential short. And if it doesn't go, if the structure of the 1 2 3 pattern breaks, then it's possible that that direction might, that the context might be shifting to a different context, which might be mean reversion or a rejection of the new location. So if the VPOC migrating down, and there's better examples that I have of like when we're not gapped up and in all-time highs, but uh I if the context is changing to mean reversion, or if it's rejecting, then I can look to do one of two things. I can wait for a pullback to like an absorption zone, potential outside edge, to then maybe place a trade in the direction of the dominant side. So if it's shifting down, and let's say volume is going down with price, I'm assuming that the dominant side at that point might be sellers might be in control. So I'll wait for an outside edge or a pullback to an absorption zone to maybe take another short back down to the mean. Um, uh, and there's no, let me think real quick. Yeah, so when the 1 2 3 pattern breaks and goes into mean reversion or starts rejecting, I can realize that I don't have a great edge in mean reversion myself, so I can sit back and wait for a more clean trade. Maybe wait for the trade or the chop to I could wait for the chop to settle down, and maybe wait for a more cleaner structured trade, or sit out of the chops. That way I myself don't get chopped up and let the algos do whatever they want to do. So it's something that has been really game changing for me, and I'm still learning how to approach it. But if something isn't like going into plan, and the VPOC migration kind of helps me to identify, and that 1 2 3 pattern helps me to kind of identify when the market might be going into chop, and I can kind of sit back and cool my jets a little bit. So it has been pretty helpful for me to see for me to like analyze these, and it's really neat. It's really cool. It's really helping me out, I think, a little bit. And so this example here, if you shift this was a gap up, and and we notice RTH opened at 9:30 here, so this is still within the first 30 minutes of the open. So market goes up and then pulls back down. Doesn't fill the gap, right? VPOC migrates down with price, and then we see the structure. The 1 2 3 pattern breaks. It fails basically to revert back to the VPOC and breaks above it, and weak shorts. And then we also see the liquidity there at pretty much almost that third or second swing high. It breaks high, pulls back to it, and then potential shorts. I don't know exactly how to look at this, but I've always kind of looked at it when I first started analyzing these as weak shorts might be looking to exit. So they're buying, exiting out of their position at that point. And that doesn't always happen this clean, but we can notice it happening pretty cleanly here, especially where that liquidity is at. So this would have been pretty decent opportunity to get long at this point, if you didn't buy long already at the bottom.
Okay. Yeah, there's a lot there. I'm not sure what to comment on.
Do you want? I think there's another
Yeah, there's another image here.
image on that same day.
Yeah,
And I can send it to you if you want.
I got it here.
Oh, okay, there we go. And this is I noticed also slowdown posted on the same trade as well. So the 1 2 3 pattern is something that I analyze on VPOC migrations and for a potential change of context. So VPOC migrating down, normally the assumption is the trade might continue south. So the first attempt, so the first higher high, second higher high, third higher high fail to mean revert down, then we're analyzing a potential context change to mean reversion or a rejection of this lower VPOC. Okay, so it looks like the VPOC might be rejecting on that lower end. The market keeps going higher and then pulls back to the VPOC, to the VWAP right here, setting up a potential VWAP to VPOC trade. Now, what's something that I've been analyzing is these absorption zones here. Man, it's so cool. I'm so glad you mentioned it. This was maybe like 3 webinars ago, but the pullbacks to these absorption zones have been something else. They have been so cool to analyze and also have really helped develop the way I'm like looking at market mechanics now with these pullbacks to these absorption zones. One of them, and I'm like noticing it almost every day now, and it also helping me to widen my stops a little bit more. Something that I've been trying to play with trade management a bit more, but this pullback to VWAP holds, and it just so happens to also be in this absorption zone as well. And let's say I entered at VWAP or mid right there long. Well, I can widen my stop down to the bottom of that absorption zone, which would also be the VHVN there. I'm still kind of playing with the stops, where to place my stop and stuff, but these pullbacks to the absorption zones have really kind of been helpful in identifying potential trade continuation examples.
Yeah.
So this is one of them.
Yeah. Well, yeah, I have some comments on some of these, the VPOC, VWAP, all this kind of stuff. But like, just I don't know if Vilan is still in here or not. But like, we saw the same thing with him, or he was buying off of that support area. So like you said, you see a lot of these massive absorption or absorption, and then look for pullbacks to those areas. And a lot of times, if we need to look at the reaction over in this area here, but it can be really good, like you've been noticing. It's really great when you see the book flip kind of over. I mean, it's not really technically a book flip, but what was resistance becomes support. And you might see a real big battle develop in there as well. It depends. This time, though, it's much more of a pullback because this is pretty strong buying through it. There's some selling in here. I mean, it's I can't really see it in the volume bars, but like it looks like more buying than there is selling. And then in essence, we're still looking for buyers to try to trade back up into these areas up here. And you got it, and you went through it. So anyway, like I don't know, I get really confused personally by a lot of lines on the chart, and just for me, even like look like anchored VWAP or whatever it might be, you really need to, and you are studying it in detail, so that makes a big difference. And if you have numbers on anything, like I said, it doesn't matter if it's a lunar cycle and you've got numbers on it and you trade it and you're profitable, who cares? That it doesn't matter. Just a comment like about making decisions off of lines. The lines are made up of the order flow. So, and we have these details here in front of us in Bookmap. For me at least, it makes more sense to understand this first and then the lines second, as a confluence. where I get, I mean, this is just a personal thing, where I get kind of tripped up on it is the lines are so stark on the chart that it kind of dominates, and then it starts to um, maybe confuse my reading of the order flow, and
It's a great point.
so yeah,
So
you have your own studies, but like this one here is very confusing because, well, first off, it's at the open. There's going to be a lot of volume, and we got a lot of volatility with all the fundamentals. Uh, and we got a lot of volume trade up here. It comes down here. It actually shifts and comes down here. But if it comes back up in here, of course, the POC is going to change because of all this volume here. It is, and the only way it wouldn't is if this was very, very light, extremely light volume. But even then, it would probably shift. And then then for me, it just gets confusing. I don't know what I'm looking at. Like, but
so something that's a good point, and I think it's a great point because Jack, me and Jack actually had a discussion in the academy, and he asked me, do you just trade off the VPOC migration? Do you just enter? And I said no. So actually, and that's actually where, if you go back to the other slide, it's actually where I kind of, there's not a whole lot of like, so that's kind of where I developed this idea of this, where I don't just enter, but I've actually noticed a structure that occurs when the VPOC migrates. So it's not a structure, it's kind of like a structure, but a pattern that occurs every time, not every time, but when the VPOC migrates, this is something I'm kind of looking for. And then another thing to mention is like you said, at the open, I don't really pay too much attention to the VPOC migration, and I actually the first 30 minutes, maybe even the first hour, if the market's a little bit choppy or something like that, I don't really take like this consider into full consideration, because you're, like you said, it is like trading off a line or whatever it is, and it's not super like clean, and I agree with that. But let's say, this is 30 minutes after the open. A general consensus has been made in the ETH, and you want to participate here in the RTH. And this structure that I've kind of like came up with here, or developed or whatever, this pattern that I've noticed, has kind of been made off the idea of what you're kind of talking about. It's not mechanical. The VPOC migration isn't just, shifted down, I'm going to enter in the direction of the shift, which is down. No, I'm taking taking the context into and also the 1 2 3 pattern break above, and then my entry isn't at the bottom, my entry's at the top, and also maybe like 5-10 minutes after the fact, so I'm not capturing the bottom. So I do agree with you. Yeah, that's a good point, not to get caught up in the lines and these things that are going on, but to build or to find patterns or structures that kind of build off of them. And if it is choppy, and if it does go into chop, then that is a cue for me to maybe sit back, kind of like what you're saying. It's, I don't want to trade off these lines or whatever. I want to wait to kind of see some resolution or something like that, or an opportunity presents itself, then I can participate. And so if you didn't participate at this location here, there's that VWAP to VPOC trade, and as well.
Yeah. I mean, like, I don't know.
I'm basically saying that I derived this idea, or this little pattern here, off of not wanting to just trade off of the line shift or a line off the chart.
Yeah, I think what I'm talking about is it's not so much directed to you. It's kind of directed to a lot of people. And if I'm looking for the image right now from Laura, and I can't find it at the moment. But she was looking at the IB high, and she's like, oh, I'm gonna short it, and this was I think yesterday, and it's a really really powerful strong day, and she got stopped out immediately. Well, if you see strong volume all the way up toward that IB high, and there's no shift or change in the outlook, like the participants are telling you something regardless of whatever that level is. It just doesn't matter. Like there's just too many
Oh, I
traders
found it.
on a which yeah, if you can maybe pop it in the a link into it.
Okay,
I can
I'll
bring it
post
up
it
here.
in.
Okay. Exactly, Stephen. Order flow over over everything. Yeah, this is it. Great, thank you. So let me copy this and put it to Notion. I think that would be easier. So yeah, and I don't know if is Vinny in here or not. I don't know. So if he's not, then we'll just go over Laura. And I think Laura's she's in Germany, so I think she's asleep. But let's take a quick look here. So here, for example, yeah, okay. So here's the IB high failed, right? Here you've got we know that there's strong momentum. We got a strong move. It's the opening drive, and look at there is some absorption in here for sure. And up at this level here too. But here's where she shorted. But what kind of criteria do you have in here to short? Look at this volume in here. I hate it when it does this. Hold on. Look at all this volume in here, and then look at these dots in here. And it traded through it too, right? Now it could reject, but there's no criteria in here. We're looking for that shift and change, like Rob on his first image, where we see that kind of it's turning. There's no turn here, but it's IB high. Boom, I'm short. Boom, I'm short. I'm stopped out, right, immediately. And then what is it? She says in here she gets in long. Okay, yeah, go long, and looking for that continuation in here. Small stop run VPI. She's got her market pulse going, and some sellers come in, not enough, I'm sorry, but maybe it was in the description. I think it was in the description. Hold on. Anyway, what I know what she wrote, and I wanted to cover this. So she gets in, but then she has no confidence now, and she gets out immediately, and it goes for her, and now all of this in here is confusion. So just you need having a higher time frame level, and IB high in this case, or whatever it is great. It's essential, but just make sure the order flow and the criteria can match it, and if you can get that, then it is more likely it's going to go in your favor. Yeah, this is something that I wanted to mention. Okay, that sounds like Laura, maybe you are in here on YouTube. Okay, there you are. So I hope that made sense. If you want to, oh yeah, if you want to write any response in here, that's fine. You can see even the flip of the book here from the what was resistance is starting to turn into support, and we get this continuation. it's not as easy as like up in some of these areas in here, I don't see as much buying, and it has been trading into high liquidity. But there really, like, there's not criteria for a short, and stay away from it until you do get that criteria. And I think regardless of your lines on a chart or certain levels, etc., just look at the order flow. And I think Stephen kind of nailed what I'm trying to say the best. He said here, yeah, learning from your criteria, working on your criteria always. See, Bruce is talking about order flow over indicators, mechanical approach. So it's about the order flow, the transactions, the price structure, and the liquidity. And then the higher time frame levels are great. Just make sure that it matches, and then you've really got something. So hope that wasn't too hard to swallow, DNT, but it was something I wanted to mention. It was I saw it in here, but I also saw it in others. In Laura's chart was a good one, I thought. And just swing, if we can just kind of swing the mentality toward that, and then the indicators. Like stops and icebergs, it's fantastic to see this. And then people were making strategies immediately off of like, oh, well, it's huge iceberg, I'm in, right? But that's I think it's a confluence. It's not everything. Now that said, as we know, Scott Pulcini, he looks at all of this stops and icebergs for his trading decisions, but he looks as a flag. Okay, I see big stops. I see icebergs. Now I'm looking at the order flow. So he's kind of doing it in reverse. He's like waiting for something to hit like your higher time frame. Now you're looking at the order flow though, and you're going to make the decision off the order flow. But DNT, I love what you got going here. I love what you had written about reflection, this absorption stuff at levels, reflected off of that, and something resonated there with you, which is great. You got your checklist in here. You're going through it. This is all great stuff. I hope it's helping you. And I think you're on mute. I think we lost you, and then you're back, and anyway.
It comes and goes. That's fine.
Okay. All right. Well, that's everything. That's everything I have. If David, if you want to follow up with anything, or I talked about Laura. I know that you covered her and gave her some feedback in her spreadsheet.
Yeah, and if she wants to reach out, I can do a chat or something. And that the only thing I'd add in here on DNT's chart here, and it's a common theme about the open and so forth. The time of day, I've said this before from how I trade, the time of day is really a key part of how my setups are, whether that's the London Open, the London close, New York Open, and then commodities open and close and so forth. So what I'm using that for, so like here, the chart you've got up here, Bruce, whether I'm expecting, we're in a bullish market, we know that, the BTD, the BTFD, whatever we want to call it. For whatever reason, typically we're seeing the market opens, it will go up a little bit and then it pulls back, whether it's a price gouge, and it's often, if you look then at the individual key stocks, whether that's Nvidia, Telstra, or as Jack was talking about earlier on, Google and so forth, those big tech stocks are pulling back for price gouges, and that drives the indice down. I'm expecting it to come down, and I know it's just a gouge, and I'm confident it's going to go back up. So that's my little bit of bias. I'm then looking for those signals. Now, whether it's here, it's something on the VPOC or POC or whatever, that bit of voodoo, I'm trying to sort of anticipate, and then I'm looking for that order flow to, and the pace that I see on my tick charts, I think, right, okay, you're right here, David. We are now going to do a 180. We are going to reverse, and I'm now going to start bidding. I'm going to start spanking away and get into this market and scaling, Bruce.
Yeah, exactly. I mean, in fact, it is, that's great to hear, David, because like you're looking at actually three different levels, not just one high time frame, but like, you have a bias. You're looking for these kind of fundamental action from some of these bellwether stocks, and then you're looking you're looking for it to continue on up. Then you look at your lines. But you're looking at the order flow around those, and that's what's going to make the deciding factor for you.
It is, and it's can't stress enough for me. It is that time of day again. X years ago, Bruce, when I was joining you on your daily webinars, and I'd be talking about 11:30 New York time. Oh, heads up, London's starting to close, and you can get that 180 switch around. So those reverse move. Moves are very much in my mind, and on one or two of my charts, I've actually got markers that flag up on the chart with a vertical line to remind me if I'm half asleep, so to speak. But yeah, it's a change of that time frame or session.
Yeah, you're totally right. I mean, that's another part that's so important. Time of day, and why is time of day important to you, David?
What's key for me is that, okay, if whether it's sort of old school, when New York opens, you've got a lot of orders that are going to be hitting the book, and then those orders hitting the book are not necessarily with any sort of thought. What I mean by that, if someone has picked up the phone to their broker on an institutional level and they've said, look, buy me 200,000 of this or 300,000 that or something, not because there's an indicator, it's because it's an investment. That people are buying into equities for a variety of reasons, or selling out of equities, and those initial orders will often, as we see on the volume, going in when the bells just opened up. That really affects the market, and we can see that in some of the sort of chat that it is a very choppy time. But with that bullish approach that we've all got at the moment, then any pullback I'm looking to drive upwards, and it is that time of day. I know I'm sort of labouring the point there. Sorry, Bruce. So those various times, and then you get towards lunchtime in New York, as we know, you can get. Scott has talked about this as an institutional sort of trader where. The PCs are kicked on, as Tom will talk about. They're kicked on, and boys and girls, old days, would go off to lunch. So you can get that bit of chop lunchtime, and then when you come after lunch, that 2:30, or for me it's 7:30 p.m. or 8:30 p.m. for Laura. That final frame is a great time where the price can really sort of juice along. And if we talk about the options market with spot gamma, when you get into that last 30 minutes, the last 20 minutes, and those 0-day options kicking in and the influence they can have, we saw that today. On ES when you and I were chatting just before the closing bell, of how the price was scooting up, and it was just purely driven by those 0-day options that were kicking in. So, time of day. Find all of you, or individually, what is working for you, but certainly be conscious of it, of how the price can move rationally or irrationally, and to try and take advantage of that, try and use that as a bit of leverage, Bruce.
Yeah, that's a great point. I mean, because I guess I'm trying to get a simple way to kind of tie that all together, and I don't know, maybe this works or not, but like in kind of a deductive reasoning, the market needs orders. The market is made up of orders. If there's no orders, there's no market. And then when are the orders the most is when there's a lot of people trading. And that's when you usually get the most price movement as well. Not necessarily, but typically. Therefore, these are the times that you want to be aware and trade.
You do, and one of the sort of I put down as a CTA a call to action. I've often been saying in Discord with Brent as we get towards that London close, particularly when we've had a rally. Okay, it doesn't always happen. You know, it's not reliable, 100% reliable. But where you've had a rally, as you get towards the London close, people are squaring off. They're covering.
Right.
So typically the price will pull back, or vice versa. It's been selling off, it'll pull up. So I'm just being minded that as we get towards London closing at 11:30 New York time, that we might get a reversal, particularly where we've had a strong move in one direction. And then I'm looking for that order flow, thinking, okay, here we are. People are squaring up. I'm going to play that trade the other way. Or if I'm in a position, I'm also thinking about my trade management.
Yeah, exactly. No, great points,
And
David.
Thanks, and that's before we, of course, we talk about, as you know, we've got a couple of comments on the charts, whether it's CPI or whether it's NFP, the data that comes out and how that is that is a time of day. That's a time of day trade as well, so to speak. So you really need to be aware of that economic calendar of what is going to be out, or again, earlier conversations, whether Jerome's speaking or whoever is speaking, what impact can that have on the market at that time of day? And do I want to be exposed to it, or do I not want to be exposed to it?
Right. Yeah, exactly. Jet Black, this is recorded. And that said, David, I think let's round it up here and wrap it up here, and we'll call it a day.
Great catch up, great talking, traders. Sorry for my usual rambling, aren't I, Dan? Dan's got a good English accent, though we haven't heard much from him tonight, or this afternoon, or this evening. Yeah, we'll see. He's going to chip in now. No, he's not.
No, he's not. Okay. All right. Thank you, everybody, and good job, everyone. Good job, coaches. Just continue to fill out your spreadsheet, and we'll get to you. Some of you guys, I know you're due. We will get to you next time. But we look at who's filling out their spreadsheets, who's posting, and we find some interesting things. We'll comment, and then we'll cover it in the and open the mic for you during these meetings. So, all right, thank you, everybody. We'll see you next time.
Thanks, Evan. Have a great evening, great weekend. Take care. Cheers. Thanks. Bye-bye. Bye.